Alright, for this video I wanted to cover the IRS Form 8865. It is filed by U.S. persons with their federal tax return to disclose their ownership interests in a foreign partnership. Now I've got a sample 8865 in front of us that we'll walk through, and then I've got a slide here that covers some of the basic information and what type of category filer we'll look at in this video. So it's really important first to highlight whether you're a U.S. person or not, whether you have an interest in a foreign partnership, and what type of category filer you are, right? So for filing this form, there's category 1, 2, 3, and 4 filers. Each type of filer has different thresholds, and each type of filer has different types of reporting requirements within the 8865. So the 8865, every filer completes the first 2 pages with the basic information here, but then there's a lot of other schedules included, A, A1, A2, so on, Schedule B, Schedule K. A lot of these schedules are not completed for certain types of filers. Okay, so it's important to figure out which type of filer you are, because that's going to drive what kind of schedules you need to complete with the 8865. So for our example here, we're going to look at a category 4 filer example. This one is relatively straightforward compared to some of the other filer categories, because category 4 filers generally have to complete the least amount of schedules. So we'll go through a 4 example, and then I'll have other videos that'll cover 1, 2, and 3 types of filers. So category 4 filers, what kind of filer is this? Well, it's a U.S. person that has some type of reportable event during the year under Section 6046 Cap A. So there's 3 basic types of reportable events, and these are all outlined in the 8865 instruction. So the first one is an acquisition. Okay, so if you're a U.S. person and you acquire a 10% or greater interest in a foreign partnership during the year, that's a reportable event. So if you have 0% at the start of the year and you contributed capital and you got 10% or more in exchange, that's a reportable event for you. So you'll need to file the 8865. Or for an acquisition, if you acquire more. So if you already own greater than 10%, and then during this period you increase your ownership by another 10 or greater, then that's a reportable event for you. So now you have to file again. So for example, let's say 2 years ago, I acquired 11% interest in the foreign partnership. So I did the filing 2 years ago. And then in the current period, I added on another 10. So I went from 11 to 21% interest. That event in this current period is a reportable event. So that's an acquisition reportable event. The second one is a disposition. So the IRS wants to know, did you acquire foreign partnership interest or did you reduce your ownership interest? If you already owned a greater than 10% interest and you sold enough units to fall below that threshold, that's a reportable event. So if I own 10% and I sold some of my units and I went down to 8% beneficial ownership, that's a reportable event. I've got to report that. Or if I sold enough units to have a 10% reduction overall, right? So if I had 31% at the start of the year and then I sold 10% of the units and now I'm down to 21, that 10% drop is a reportable event, okay? And then last but not least, the third event is just a change in proportional interest. So this is kind of a catch-all, because what it does is it ensures that you might have a reporting obligation even if you didn't directly acquire or dispose of any units. You just had a change in ownership because other people were coming in and out of the partnership. So if we think about that practically, right, if you invest in a partnership, so I contribute capital, I get ownership units in exchange, and then somebody else comes in, I haven't done anything, right? I haven't acquired or disposed of any of my units, but because of that person coming in, that ownership entry likely diluted my overall ownership in the company. And so it's the dilution that creates that proportional interest change. So if I have a change in proportional interest because somebody's coming in and out of the partnership during the year, then that'll be a reportable event under 6046 Cap A, and so I've got to report that on an 8865. So those are the 3 types of Category 4 filers. Now, if you become a Category 4 filer, you need to complete all of these schedules here. And some of them won't apply necessarily, right? So we'll go through these examples as I cover them. But for example, Schedule G, statement of application of the gain deferral method under 721. If you look at the table in the 8865 instructions, it requires this schedule to be included for a Category 4 filer, but this might not apply to you if you didn't have a Section 721 transfer. 721 covers the transfer of property to a partnership that has a built-in gain. So if you only transfer cash, this is likely not going to apply to you, so you don't have to worry about it, but you still need to be mindful of the schedule because the IRS is going to want to see it, even if it's going to be blank. So let's look at the 8865. We'll cover some of the pieces and then these required schedules for a filer. So in our example here, we had John Q, taxpayer. What he did was he contributed about $62,500 to a foreign partnership. It's a Cayman Islands partnership, and so he gave him $62,500 in cash, and he got partnership units in exchange. So based on the thresholds, he became a Category 4 filer, so he's got to file this schedule. So at the top here, we have the name of the taxpayer, right? So this is a U.S. person, John Q, taxpayer, his Social Security number, and then he checks which type of filer he is, right? So he's a Category 4 filer. Filer's tax year, right? John is a U.S. individual, so he's on a calendar year end, so it's Jan 1 to December 31st. And we have his address here. Now, items C through F here might not apply. But if these elements do apply, so for example, if you get a K1 and it shows that John's being allocated non-recourse debt of X amount, he would indicate that number there. But in this case, the schedule John received shows that the partnership has no liabilities, so he's not being allocated any type of non-recourse debt or other liabilities for that matter. Okay, so now let's go into items G through H. Name of the foreign partnership. Again, this is a Cayman Islands investment partnership. So we have a Cayman Islands LP. The EIN for the company, it did apply for an EIN because it is also filing K1, so you put the EIN there. A lot of foreign partnerships might not have an EIN, so if that's blank, then you have to enter a reference ID number for the company. The reference ID number is chosen by you, okay? So you can enter, John could enter Cayman Islands LP 123 or whatever he wants to use. He just has to use it consistently throughout every year, as long as he holds this interest. Country under whose law is organized, pretty straightforward. Where was the entity set up? That's very important. Don't enter where the entity is managed. So for example, this is a Cayman Islands entity, but the investment manager might be based in New York, let's say. It's still a Cayman Islands entity, right? Even though the manager is in New York, this is a Cayman LP, so you would put Cayman Islands. Date the entity was created, Jan 1, principal place of business, business activity code, type of activity, all pretty straightforward. The company uses US dollars as its functional currency. And so here we have items H1 through 4. Name and address of the agent in the US. They don't have any for this entity, but they do have a local agent in the Cayman Islands that keeps the same books and records, so we don't have to complete 4 because it's the same address and company. Now, in box 2 here, the foreign partnership in this case did file a 1065, right? So Form 1065 can be filed by U.S. or domestic partnerships, and in this case, they filed it so they could report on K1s the allocation of income that John's going to have to pick up. Now, just as a side note here, if John gets a K1 from this partnership and he reports all the income and losses on his return, he still needs to include this 8865 because it's a foreign partnership, okay, if he meets that certain category of filer. So don't think that, well, because I have reported all the income from my K1, I've paid all the tax on the capital gains, the dividends, the interest that's being allocated, I don't have to do this. No, that's not the standard. You have to do both if it applies. So in John's case, he reported all the income, but he still qualifies as a Cat 4 filer, so he's got to do the 8865. Okay, so questions 5 through 11, and on the next page here, you should always answer all these. Now, technically, some of these questions you don't have to answer unless you're, let's say, a Category 1 filer. So, for example, line 11, the instructions say you only have to answer this if you're a Cat 1 filer, but if you're going to answer all these, it's appropriate to just answer all of them. I just do that as kind of a best practice, even though technically as a Cat 4 he doesn't answer 11, but go ahead and answer them. Let's see. So 12A, does he have any FDII? This should all be disclosed on the K1 and the supplementary information to the partner. So John is basically just reading down the footnotes to figure out, how to answer these questions. So no in this case. Section 707, those are the disguised sale rules for transfers of property. They don't apply in this case for this partnership because they're only receiving cash in exchange for membership units. So no's for all of those. Okay, so now here's where we get to some of the questions that apply specifically to the Cat 4 filer. So Schedule A must be completed for a Cat 4 filer, right? Do you own a direct or indirect interest? In this case, John owns a direct interest in the partnership, right? So he contributed cash directly to the entity in exchange for the partnership units. He doesn't hold it through some type of intermediary. Constructive interest would be if you hold it indirectly through, let's say, another partnership, or if you hold it via a family member, you might have a constructive interest element there. A1 and A2 don't have to be completed for Cat 4 filers, so we can leave those blank. A3 should be completed if there is affiliations with other partnerships. So in this example, the Cayman Islands Limited Partnership invested directly into another partnership in Delaware, right? So it asks us to list all partnerships, foreign and domestic, in which the foreign partnership owns an interest. So in our example here, let's say the Cayman Islands LP invested cash into this LLC in exchange for 20% interest. Well, it's got to be disclosed here. So we have the Feeder Fund 1 LLC, the Delaware address, EIN, because it owns a 20% interest, so greater than 10. And then in this case, it's not a foreign partnership, so we would leave that unchecked. And there is no ordinary income or loss passing through from this entity. It's just investment portfolio income, so dividends, interest, capital gains. Okay, so A and A3 need to be completed. Now, for Cat 4 filers, we don't do Schedule B, K, L, M, M1, M2, Schedule N. You can leave all these blank. Now, if you have a Cat 1 filer, for example, you're going to have to do all of these, right? It's one of the more onerous types of category filers to have because you have to almost complete the entire form. Okay, so Schedule P must be completed for a Cat 4 filer. So we're completing Part 1 because we acquired the units during the year. So we have John here as the taxpayer, the name of the foreign partnership again, Cayman Islands Investment Partnership LP. And in this case, we're acquiring the units directly from the partnership. So I'm going to re-enter the partnership name there, the date that we contributed capital, the amount of the FMV of the interest acquired, and it's the same as their basis, right? So I put $62,500 in, and I got $62,500 worth of membership units in the same transaction. Okay. Now, percentage interest before the acquisition, 0, right? Because I'm a new partner. And then after the acquisition, I acquired my beneficial ownership interest after putting the capital in was 12.5% of the fund. Okay. Again, Part 2, 3, these would be completed if this was the triggering event for the Cat 4 filer. Remember, Category 4 filer is one of 3 events. You acquire units, you dispose of them, or there's just a change in proportional interest. In this case, we had event type 1 for acquisition. Okay, and in Part 4, I always like to put a little footnote here. Supplement for information required to be reported. So in Part 1A up here, so Part 1, Column A, I'm indicating that the taxpayer made a direct cash contribution to the foreign partnership. I like to enter that there to make it clear that the way I acquired, or the way the taxpayer acquired these units, was by putting cash directly into the partnership. It's not as if I went to an existing partner and bought their units. Okay, so like if Brad, let's say, was already a member in this partnership, and I went to Brad and I said, hey, I want to buy your partnership units in this Cayman Island LP, that would be an acquisition, but it would be from a third party, right? It'd be from an existing partner. In this case, that's not what happened here, right? I put capital directly in exchange for units being issued by the partnership directly. I didn't acquire it from an existing partner. Okay? And then we have, so Schedule, let me zoom out a little so we can see all this. So Schedule G here, let's see. So Schedule G here, this is the 721 gain deferral issues. So again, if you contributed property with a built-in gain to the foreign partnership in exchange for units, then you might have a 721 issue. But in this example, these forms are simply blank because we don't have any 721 issues, because John and all the other partners, all they did was put cash into the partnership in exchange for equity in the partnership. It's not as if somebody contributed a building that had a built-in gain, or somebody contributed appreciated stock or other securities where you might have an issue there. So we're including these schedules, but again, they're blank, right? Because there's no events that we need to be reporting there. Okay, so that covers it for this tutorial on the 8865. Cat 4 specifically. Again, I didn't go into Cat 1, 2, or 3, just the Category 4 filers. So yeah, again, that covers it. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.